Right now, as you're watching this video, thousands of seniors across America are writing checks they legally don't have to write, paying bills that the government, the IRS, and even federal law says they are exempt from. And nobody, not their bank, not their accountant, not their financial advisor, ever told them. That ends today. Because in the next few minutes, I'm going to walk you through 5 specific bills, fees, and financial obligations that millions of American seniors are still paying in 2026, even though the law says they don't have to. And before this video is over, you're going to find out exactly which category you fall into, how much money you may have already lost, and what you can do starting this week to stop the bleeding. Stay with me. Because number 3 on this list is the one that's going to make your jaw drop. Let me paint you a picture. Imagine a 72-year-old woman in Ohio. Let's call her Margaret. Margaret lives on a fixed income. Social Security comes in on the second Wednesday of every month. She budgets carefully, she clips coupons, she skips the thermostat in winter to keep her electric bill down. She does everything right. And every single month, Margaret pays a $148 Medicare premium, a $310 property tax bill, a phone service fee, a bank maintenance charge, and a portion of her prescription drug costs. Over a year, that's nearly $8,000 in bills she has convinced herself are unavoidable. But here's the thing about Margaret. She qualifies for full exemption or major reduction on 4 out of those 5 bills. 4 out of 5. She just doesn't know it, and nobody told her. Margaret is not alone. According to research from the National Council on Aging, more than 40% of eligible seniors are missing out on benefits and exemptions they are legally entitled to. Not because the programs don't exist, but because the system is not designed to hand you this information. You have to go find it. And that's exactly what we're doing right now. Let's start with something that hits seniors in almost every state. Property taxes. If you are 65 or older, there is a very good chance you qualify for what's called a senior property tax exemption. And in some states, that exemption can reduce your bill by 30%, 50%, or in certain cases, eliminate your property tax liability almost entirely. In Florida, seniors who meet income thresholds can qualify for a full homestead exemption. In Illinois, the Senior Freeze program locks your assessed value in place so your tax bill never increases again. In Texas, seniors over 65 get an automatic additional homestead exemption, and they can defer property taxes indefinitely with no penalty until the home is sold. Did you hear that? Defer. Indefinitely. No penalty. But here's the part that gets me every time. Most counties don't automatically apply these exemptions. You have to apply for them. You have to fill out a form, show your ID, prove your age, sometimes provide income documentation, and the deadlines vary by state. Some states have a March 1st cutoff. Others go to May. A few states have rolling deadlines year-round, which means if you miss the window this year, you might be waiting another 12 months. And that's another 12 months of overpaying. If you have not checked with your county property appraiser's office recently, do it this week. Not next month. This week. Call them. Ask them directly, do I qualify for a senior exemption? That one phone call could be worth thousands of dollars. Now, here's where it gets even more interesting, because what I'm about to tell you about Medicare premiums has changed significantly in 2026, and even longtime Medicare recipients are getting blindsided by it. Most people know that Medicare Part B has a standard monthly premium. In 2026, that premium is $185 per month for most beneficiaries. That's $2,220 per year just for basic coverage. Add in Part D for prescription drugs, and you could easily be paying $300 to $400 a month in premiums alone. But here's what almost nobody talks about. There is a federal program called the Medicare Savings Program, and it exists specifically to cover your Medicare premiums for you, all of them. The government literally pays your Medicare bill if you qualify. There are 4 levels of the Medicare Savings Program. The lowest level, called the Qualified Medicare Beneficiary Program, covers your Part A premiums, your Part B premiums, and all your deductibles and co-payments. If you are a single senior with monthly income under roughly $1,275 or a couple under $1,724, the exact figures for 2026, you may qualify for full coverage. That means zero premium, zero deductible, zero copay for most services. And yet the Kaiser Family Foundation has estimated that roughly 30% of people who are eligible for Medicare savings programs are not enrolled. Not because they don't need the help, because they didn't know it existed. Here's the kicker. Even if you earn a little over those thresholds, there are 2 additional program tiers that can still cover your Part B premium, which again is $185 a month. That's $2,220 a year back in your pocket. To apply, you go through your state Medicaid office. Not Medicare, Medicaid. That trips people up all the time. And the application process has gotten simpler in most states after a 2024 federal mandate, but you still have to take the first step. I want to pause right here because something big is coming in the next 2 items on this list. And this is where the numbers get uncomfortable because we're talking about fees and charges that banks and service providers are quietly counting on you not to notice. Keep watching, because what I'm going to show you about phone and utility bills is something most seniors have never even been told about. Did you know that the federal government runs a program specifically to reduce the phone and internet bills of low-income seniors? It's called the Lifeline Program, and it's administered by the FCC. In 2026, Lifeline provides eligible households with a discount of up to $9.25 per month on their phone or internet service. If you live on tribal lands, that discount jumps to $34.25 per month. But wait, there's a second program layered on top of Lifeline that many seniors haven't heard of. It's called the Affordable Connectivity Program, or ACP, and while funding battles have continued in Congress, expanded provisions in 2025 locked in additional broadband subsidies for households with seniors on Social Security income. Eligible seniors can receive up to $30 per month off their internet bill. Some qualifying households receive that service entirely for free. Free internet every month. For a senior on a fixed income paying $85 a month for bundled phone and internet service, these programs combined could eliminate almost that entire bill. We're talking about more than $1,000 per year in savings on services you already use every single day. The eligibility requirements tie directly to federal assistance programs. If you receive Medicaid, supplemental security income, federal public housing assistance, or veterans pension benefits, you automatically qualify. No additional income verification needed. But here's the trap. Carriers don't advertise this at the top of their website. You won't see it in your monthly bill. In fact, some carriers have been fined by the FCC in recent years for failing to properly inform eligible customers. The system requires you to seek it out. Go to lifelinesupport.org. That is the official government website. Take 10 minutes, check your eligibility, and apply. Because every month you wait is another $30 to $40 walking out the door for no reason. Now let's talk about something that makes me genuinely angry every time I see it. Bank maintenance fees. Right now, millions of seniors are paying between $10 and $25 per month in monthly maintenance fees to their bank, just for having a checking account. That's up to $300 a year. For what? For the privilege of keeping your own money somewhere. And here's the thing most people don't realize. Federal law and a growing number of state banking regulations now require banks that participate in certain government programs to offer what are called senior exemption accounts or basic banking accounts with zero monthly fees for customers over a certain age, typically 62 or 65. More importantly, if you receive Social Security via direct deposit, many banks are now contractually prohibited from charging you maintenance fees under updated Treasury Department direct deposit guidelines that took effect in 2025. Your Social Security check going directly into that account is essentially your shield against those fees. But you have to know to use it. If you are currently paying a monthly maintenance fee at your bank and you receive Social Security by direct deposit, call your bank this week and ask them why. Ask them specifically about their senior account options or their Social Security direct deposit fee waiver policy. If they can't give you a good answer, it is absolutely time to switch banks. Online banks like Ally, Marcus, and several credit unions offer completely fee-free accounts with no minimums, no monthly charges, and better interest rates on savings. Some credit unions have senior-specific memberships that come with additional perks: free checks, free notary services, waived wire transfer fees that could save you hundreds of dollars a year. You have worked too hard for your money to let a bank skim $25 off the top of it every single month. And now we come to the fifth bill, the one that affects millions of veterans, disabled seniors, and Social Security disability recipients, and one that carries the most dramatic potential for savings of anything we've covered today: state income tax on Social Security benefits. Here's what most people don't know. As of 2026, 41 states in America do not tax Social Security income at all, not one penny. And several more states offer partial exemptions based on age or income level. But if you live in one of the remaining states that does tax Social Security, and you haven't checked recently, you may be overpaying your state income taxes every single year. More importantly, there have been legislative changes in multiple states over the past 2 years, specifically eliminating or phasing out Social Security taxation. Missouri eliminated it in 2023. Nebraska eliminated it in 2024. Kansas eliminated it in 2024. Colorado expanded its exemption in 2025. If you filed your 2024 or 2025 state taxes under old rules, or if your tax preparer didn't flag these changes, you may have overpaid. In some states, you can file an amended return and get that money back, retroactively. Beyond Social Security, many states now offer additional income tax exemptions for seniors over 65 on pension income, retirement account distributions, and even part-time work income. The IRS standard deduction for seniors in 2026 is $16,550 for single filers and $32,300 for married couples filing jointly, significantly higher than the standard deduction for younger taxpayers. And most financial advisors skip right past this when they're doing basic tax prep. Here's what I need you to take away from everything we've covered today. The system is not going to come to your door and hand you these savings. The county tax office won't call you to remind you about your exemption. Medicare won't automatically enroll you in the savings program. Your bank won't volunteer to remove your fees. The phone company won't sign you up for Lifeline on your behalf. Every single one of these programs, exemptions, and protections was designed to help you. But they require you to take the first step. And that first step starts with knowing they exist. If you are 62 or older, or if you know a parent, grandparent, neighbor, or friend who is, share this video with them right now. Because what we just covered could be worth anywhere from $1,200 to $8,000 or more per year in bills they don't legally have to pay. That is not a small number. For someone on a fixed income, that is the difference between running out of money in October and making it comfortably through December. That is the difference between choosing heat or groceries and having both. Property tax exemptions, Medicare savings programs, phone and internet discounts, bank fee waivers, state income tax exemptions on Social Security. 5 bills. 5 categories of money walking out the door every month that the law says can stay in your pocket. Don't let another month go by without making these calls. Don't let another quarter pass without filing those applications. The deadlines are real, the savings are real, and the only thing standing between you and thousands of dollars in annual savings is the information you just received. If this video helped you today, please hit the like button right now. It takes 2 seconds, and it helps us reach more seniors who need to hear this. Subscribe so you don't miss our next video, because we are going deep on Social Security changes coming in late 2026 that could affect your monthly payment amount. And most recipients have no idea it's happening. Drop a comment below and tell me, which one of these 5 bills are you going to check on first? I read every comment, and I want to know how much you're able to save. Your money, your rights, your retirement. Don't give it away.